So we're talking about buying a commercial property using your SMSF. Now, the question you might ask yourself is, who is this strategy for? Well, I've seen it a number of times, and in fact, the majority of the SMSFs that we look after, and I've looked after in the past, actually use commercial property in their investment mix. The examples I've seen are a gym buying the premises where they operate their gym from, a dentist buying a dentist practice, you've got a family farm being passed down through the generations via an SMSF, or even what we're doing now, which is an accounting firm buying their office to lease. Now, what you're doing by, in the example where you're actually buying it for your own business, is you're turning what was previously an operating expense, so rent that you're paying someone else and making someone else rich, into a wealth creation strategy. So you're actually building your own family's wealth by paying that rent instead of someone else to your own SMSF. And I guess the last thing to consider there is, if you're going to be in your business premises for a while, then this is something that you really need to consider. Now, there's two main benefits for doing this. Now, the first one is a massive tax-saving vehicle. So superannuation is a low tax environment. You pay usually no more than 15% tax, and that can be as low as 0% when you're drawing a pension from your self-managed super fund. So that is ridiculous. And if you buy it, say, you buy it now, in 30 years' time, you want to sell it and you're making a big gain, and if you pay 0% versus 49% in your own name, that's just incomparable. The second major reason is actually doing it with money that is already out of bounds. So superannuation you can't touch now, so to speak. So you're buying an asset for your personal, your family wealth with money you can't touch anyway. So why not use super? And that means you maximize the money you can touch now from not buying it with your outside of super money. So there are two reasons why this strategy is really great. And I've got a couple of questions on the whiteboard behind me. The first one is, who can you buy the property from? Now, you can actually buy the commercial property from yourself. So you may own the property either in your own name or a trust that you control. Similarly, your family might own it as well, and this is a nice way to pass investments down to your children. But you can actually buy commercial property from yourself with your SMSF. Now, there's special rules with SMSFs. You can't buy anything from yourself. You can't go and buy, a collective, like a vintage car that you own outside of super with your SMSF. There's only two things you can buy from yourself. One of them is commercial property, which is what we're talking about. So it's business property, not residential. And the second one is also listed shares. So listed on the Australian Stock Exchange. So that's the only two exemptions of things you can buy from yourself. Now, the third one here is you can also buy a commercial property from a third party. So looking at the commercial property listings on the internet, or going out and finding a real estate agent with a brief of these are the things you want in a commercial property. So you can buy that from yourself, your family, or anyone who's selling a commercial property. My second question here is, who can you rent the commercial property to? Now, in the introduction, we touched on that a big advantage is actually renting your property to your own business. Now, that's something that is perfectly legal with your self-managed super fund, and you can do that. And the other thing is, you can actually rent it to another business. And in the examples I mentioned earlier, some people actually buy a bigger building than they need themselves, and it might have 2 or 3 units, or separate. If it's a factory, you might have 3 factories in the one building, and you actually rent them to, one is to yourself, and the 2 others are to 2 other businesses. Now, the question you've got to keep in mind when you're renting it to yourself in particular is, how much do you charge? Now this is a really critical thing, and if you don't do the right thing here, the ATO is going to have a look at this situation and go, no, this isn't working, and there's pretty serious consequences if you don't get this right. So the answer to how much do you charge is a market rate of rent. And you might say, well, who tells me what a market rate of rent is? Can I just make the figure up? Well, no. The best practice is to actually talk to a real estate agent, and they can give you a market value appraisal on what you should be charging for your rent. And really, you should be charging your own business what you'd charge anybody else. It's sort of, at arm's length, they call it, and it should be a reflection of what the market is paying. So that is how much do you charge and who you can rent it to. Now the last question here is, how do you pay for it? Commercial properties can be quite expensive, especially if you're going to buy a part of it for yourself and also rent it out to another couple of businesses. So it's a serious question of how do you pay for it? Well, the first way, and the most logical, is the money you've already got in your self-managed super fund and each member's existing balances. So that's one thing. Now the second way that I see that people finance this is also in the year that they buy the commercial property, they get all of the members to max out their deductible contributions. So for instance, if your limit is $30,000 in a financial year and you've got 4 members, you can each put that $30K in, and that equals another $120,000 that you can add to your cash to buy that commercial property. Now the third one here is a loan from the bank. So we go into a bit more detail in another week in the course on the detail of how much you can borrow from the bank and the interest and all that sort of stuff. But a good portion of your commercial property can also come thanks to one of those banks out there. And the last strategy, which is one that's close to my heart, is that if you've got cash sitting around, you've made good profit in your business, and you've got cash sitting in a company or a trust for tax purposes, wink wink, then it's just sitting there in a bank account. What you can actually do is lend that money from your trust or your company back into your super fund. So the same way the bank would lend your super fund the money, you lend your own personal funds into your SMSF, and your SMSF repays that to yourself. So you can become your own bank in that sense. So it's really cool. So that's how you can buy a commercial property in your SMSF and even rent it to your own business.